Hey everyone, welcome to the Dee-Brief with Dr. D, your go-to space for real talk, real strategy, and real leadership, one insight at a time. I'm your host, Dr. D, and this is where we equip leaders for success and empower individuals to heal, to rebuild, and to reclaim the joy they so deserve. We tackle executive leadership, transformational coaching, and also the deep work of healing and restoration. This is where it all happens. Each episode is packed with powerful conversations, expert insights, and strategies to help you lead boldly, heal deeply, and thrive fully. So get ready. It's time to level up your mindset, embrace your transformation, and walk into your purpose. Don't forget to subscribe to our YouTube channel and follow us on social media because you never want to miss an episode. Let's go. It's time to debrief.
Hello, everyone. Hello, and welcome to another episode of the Dee-Brief with Dr. D. Real talk, real strategy, and real leadership, one insight at a time. I am your host, Dr. D, and I am excited to be here to talk to someone who I met several weeks ago, and she has just become an amazing partner and a friend. I'm so impressed by all that she is doing, and I want to introduce you to Wanda Jackson. She is an agent at New York Life Insurance Company, and today we are going to talk about protecting your legacy, life insurance, and wealth planning in communities of color. This is an important conversation. Wanda, welcome to the show.
Thank you so much. It's a pleasure to be here. I'm so excited to meet with you as well. It's been a pleasure knowing you, and I'm looking forward to sharing some information very important to our community.
Awesome, awesome. Thank you so much for being here, especially in April, Financial Literacy Month. This is
Yes.
a real important conversation. So before we get into life insurance and financial planning and just the importance of that, I always like to have our guests introduce themselves. So if someone were to ask you, who is Wanda Jackson? How would you describe it?
Wanda Jackson is a professional individual, but yet very much embedded in the family, very, very family oriented. To know me is to know my family. I am proud to say I'm married 40 years, happily married. I have three beautiful children, three beautiful grandchildren, one bonus grandchild, and a host of family and friends who I love so dearly, and I'm actually reminded of it. This week was my birthday, and they just loved on me, and I'm just so grateful. So you caught me at a really mushy time right now.
Awesome, awesome. Well, happy birthday. That's really
Thank you.
important that you got to spend it with your family and friends and
Thank you so
share
much.
today. And you're welcome to give you your flowers while you can smell them.
Hmm?
To give you your flowers while you can still smell them.
Yes,
Yeah,
yes.
did that.
Amen. Yes, that's correct. Yeah.
Yeah. So let's jump in. Especially during this time, there is such a real importance about making sure that we are financially secure, right?
Correct.
For our families and the event of a death, where we all will go down that road one day. But also just to make sure that we have information. So, can you explain to us, just in the simplest terms, what is life insurance and why do people?
So life insurance is protection. It's a way that you put in place something that will protect your loved ones should you expire early or not make it home, today or tomorrow. Um, but in its simplest form for me, I call life insurance love insurance. Life insurance is love insurance. It definitely makes sure that you secure those things and those people that mean the most to you. And when I say secure, I mean you protect them from financial hardship should you no longer be present to protect them yourself. You know, one of your greatest assets is your ability to earn a living, to get wealth. But if you're not here, your ability to get wealth is not here. And so that goes away immediately. And, you know, unfortunately, you know, within the first 6 months of the passing of a primary breadwinner, you find that the family could be in a financial crisis if they are not properly prepared for these inevitables of life.
Thank you. That makes sense. I love insurance.
Love insurance, absolutely.
I've
I
never heard
mean,
it described that way.
yeah, if you love your children, you're protecting your children. If you love your home, you're protecting that mortgage. You're making sure that the family will not have to move out of the house within 6 months of you passing because your spouse or your partner is not able to handle all of the financial obligations on their own. And that's a really real fact that people get misplaced because they can't afford to live where they are. So at the death of a loved one, you could be there for another 6 months. But then, you know, it starts to get real, the fact that that other income is missing. Hmm.
Absolutely. You're so right. Within 6 months of someone passing, everything changes. You know,
Yes.
not just the phone calls and people checking on you to make sure you're okay, but everything else starts to change. It's really, really important. So, we hear about so many different types of life insurance, whole life insurance, term life insurance, and, what are the different
So, you know, it's kind of straightforward, but I'll give you an analogy because I think it helps us to kind of like file it in a certain place in our brain, to make it easy. But the first insurance that I'll mention is called term insurance, and it's a lot like what it says. You have it for a term, which means you can have it for 10 years, 15 years, 20 years. You own it for a term. But I would like to use the analogy like it's like renting an apartment, because you do get the benefit of living in the apartment, using the amenities, using the utilities, and calling it your home while you're there. You do get to be there, but at the end of the time that you're there, you technically have nothing to show for it. In other words, you've poured your money into it, in order to make sure you can use the full benefit of it while you're there. But at the end of leaving, before you leave, or at the time that you leave, you don't leave with any value. It hasn't grown any cash value for you. You really kind of what we call have nothing to show for it, right? As opposed to the next type of insurance, which is the cream of the crop, so to speak, and that is whole life insurance. And it is also much like its name. You have it for your whole life. It lasts for your whole life. And in most cases, it's the whole life insurance that will actually bury a healthy person, right? Because the term insurance being temporary, we use it a lot to cover big expenses like your mortgage. You know, we would layer your insurance so that you can cover a mortgage during the 30 years that you're paying a mortgage. But, for all purposes, at the end of, 20 or 30 years, and your kids are now all grown up or whatever, you don't have the same financial obligations. So it's okay if the term insurance goes away at that point. But the reason we layer it is because you always need to have a foundation of whole life that will be there for your whole life. But later we'll touch on some of the many bells and whistles, so to speak, of whole life insurance and all the other reasons why it's a great tool to have in your tool chest of financial products.
No, thank you for that. And you're putting things in some simple terms so that it's easy for people to understand. So thank you for that. Um, so insurance is something that is really, really important to make
Yes.
sure you're protecting your family. And unfortunately, I get the feeling that a lot of people don't even understand that. So what would you recommend? When should someone start thinking about insurance?
So, prior to doing what I'm doing, I was a real estate broker, and my first client as a financial professional was a former real estate client who purchased his home, and then he was up at night worrying what would happen to my family if I, the breadwinner, didn't make it home, because he described the fact that he commuted back and forth in a car, and the roads can be treacherous, and he was just worried about what would happen. So, of course, for all of life's milestones, people think about life insurance. So you buy a house, you think about how to cover it, like to protect it. You have children, you definitely think about making sure that those children will be okay if you're not here. You go to college, you think about, is there anything that I can do to make this college financial experience, better, more tolerable, so those are some of the milestones of life. But I love to talk to young people, as soon as they are young adults and they have their first job. We should be talking about preparing life insurance. And the reason is because two of the most important factors that determine a person's insurability are, number one, their health, and number two, their age.
Mhm.
So that's important because if you can catch a 20-year-old, a 21-year-old, a 30-year-old early, you can start to talk to them about the importance of securing their life insurance while they are very young, because that puts them in a position for their whole life to have a premium that is much less expensive than if they had waited until they were 40 or 50 years old to look for insurance for the first time. So time is our friend. You know, if you have the time factor on your side and also the health factor, you can really have the kind of premiums that will last for your whole life, and they will be very low compared to if you start at 40, 45, 50. It makes a difference. It matters, you know.
Yeah, for sure. The earlier you start, the better. So it's almost as if as soon as you can start, you're working, you have a family, you should really start to look into the
That's correct. And I just want to deal or to speak to the misnomer that life insurance is expensive, because it's not. The way that life insurance, typically works is if you can afford whole life, you buy whole life. If you're not prepared yet, and I say yet because a young person at 22 is not earning the income that they will earn, at 42, right? But but a great strategy is for the 22-year-old to buy term life insurance, um, for really as little as $8 a month, if you can believe that. $8 a month, $10 a month, $15 a month.
people spend more than that a day.
Hmm?
People spend more than that a day on coffee or lunch.
Right. On their cell phone insurance, right?
Right.
Yeah. So, if a young person can put in place a term policy, New York Life does a phenomenal job of making sure that that policy that they purchased is valuable. So even though it's a term policy, it's always upgradable to
Mhm.
whole life. So in other words, I'm saying to a young person, you purchased a term policy for $8 a month. Now, in 5 years, you're no longer 22, you're 27 years old, and your salary has changed three times. and we can, start to look at your financial book and mature it a little bit. As you mature, we'll mature your financial book, and you can actually purchase your first piece of whole life insurance. You don't have to buy it in big chunks that are very expensive. You can start really, small with, you know 25,000, $100,000 of whole life insurance. But New York Life will give you back credit for the money you put out for your term policy toward the premium for your whole life policy.
Wow.
So yeah, I think that's like a really great bonus. And some people accumulate, good credit in the account so that in the year 3 or year 4, also you can upgrade this year a tiny bit, and then next year you can come back and say, "Hey, Wanda, let's upgrade a little bit more," and you can do that. And then the next year, so and so on. And so when
Mhm.
you look back after 5 or 10 years, you have stepped your way into the policy that will serve your entire life. you know and I think that's just brilliant, a brilliant strategy for a young person.
Yeah, and a very good strategy for New York Life to think as well.
Right.
So that is a good segue into the next part of the conversation. I really want to talk about um, generational wealth and what that means. Because I know a lot of times life insurance, love insurance is to protect your family, but there's also other things, other benefits from life insurance. So,
It's so correct. I think that one of the biggest aha moments for me in transitioning from real estate to financial planning is that there's so much information that we don't know,
right,
right?
right.
So, two things come to mind. Number one, when you talk about a whole life policy, different than the term policy, I described the term policy as being the one similar to renting your apartment. When you leave, you have nothing to show for it. But New York Life is a mutual company, which means that we typically pay dividends in addition to the cash value growth that would grow in an account. So you
Mhm.
have, interest and dividends that are feeding or increasing the amount that is being built up in the account over the years. So this is an amazing vehicle for saving, for building generational wealth, for positioning you to be able to have tax-free access to this money that grows in your account. Uh, I just think that it is so important to get a message out there,
Mhm.
to take a look at what we're talking about. You know, get your foot in the door of insurance with a very inexpensive um, term policy. The term policy will capture your health and it will capture your age. It
Mhm.
will lock you in and lock in the fact that you're insurable. After that point, you are always able to purchase additional insurance. You don't have to, if you do that in the first 3 years, you won't have to reprove that you are eligible. New York Life will kind of like grandfather you in, so to speak. Um, but it locks in certain things that you couldn't otherwise lock in, like if you waited until 45. The best example of that is with children. If you told me you had a grandchild and your grandchild was 5 years old, and you opened a whole life policy on your grandchild, what is so amazing to me about doing that is that you have captured your grandchild's youth and health. So let's say that, hypothetically speaking, and God forbid, that at 7 years old, the grandchild got diagnosed with sickle cell. This actually happened to a colleague of mine. Um, the grandchild would not be insurable if you presented them at 7 with sickle cell.
Mhm.
However, because grandma had the mind set to go ahead and gift the grandchild's policy at the age of 5, before any diagnosis set in, that child is always insurable. What did you just do? Like, you impacted that life forever
Absolutely.
because you bought a whole life policy at the age of 5, and they're very inexpensive for children when they're 5. But you have secured the fact that this individual, even when they're 40 and they were healthy all the way from 5 to 40, if they get diagnosed with, diabetes, high blood pressure, and high cholesterol, they would not be insurable in many cases, right? Or they had a heart attack at 45 years old, they would not be, in many cases. Every case is different. You have to go through underwriting, but it would not be insurable. But in the case of this individual, because grandma purchased it at 5, they're always insurable. They
Yeah,
always have insurance.
yeah, that's great forward thinking. You know that I've recently gone through the loss of my parents and my sibling. But my mother had insurance on me as a baby, and when she passed, she had her insurance that my grandmother had for her when she was a baby.
Amazing. You see, but that kind of legacy only happens when you make it happen. Like you are blessed to be part of a family that had the mindset, the forward thinking to make that happen. But so many of us in our communities, and all of the disparities and all of the systemic issues that we have with with communities of color, not having access to the same information, um, not trusting really easily because of some of the things that have happened over the years. Many of us don't know the information, and many of us that have heard the information hesitate to act on the information because of a lack of trust.
Yeah. So what have you been seeing? 'Cause I want to talk about that as well. I want to get into how life insurance can be leveraged for people who are still alive. But maybe you can add it to this question as well. What are you seeing from your clients? Why is life insurance being so underused in communities?
In the Black community, 30 to 40, 40 to 50 tops, um, of Black households have life insurance, compared to 60 to 70% in Caucasian households have
Mhm.
life insurance. Um, again, number one for me and in my own family, we don't talk about it. It's a topic that, I remember my mom. She said, "Wanda, why are you being so morbid? You know, I'm going to live forever. I'm going to live until I'm 100. And you can push, but at some point you have to let it go if it's just not part of your family makeup to talk about end of life preparation, or um, making plans for the inevitable. We are all born, we all live, we love, and then we leave, right? So I'd say we live, we love, and we leave, basically. And um, it's not a morbid conversation. It is a managing conversation. It is a managing your expectations. How people say, control what you can control.
Right.
I've heard that so many times. This is one of those things that we can control, but um, I think we don't, because in our community there is a huge lack of trust. you know and I mean, if you look at history, we have some good reasons for that. Huh?
It's legitimate.
Yes, exactly, it's legitimate. And so I just like look to continue to talk to people, establish myself as a trusted partner, answer all of the questions, so that all of any fears or concerns for not knowing can be addressed.
Mm. No, that's great. So how can we normalize this conversation in families, in our communities, in our houses of worship? What are some suggestions that you can think of to help normalize
I think that first and foremost, we have to lead by example. Like you just mentioned how your grandmother and your mother had life insurance. I'm sure that their leadership by example has impacted your own life and some of the choices that you get to make. Um, I have really the tale of two mothers. My mom, who didn't talk about it, and my mother-in-law, who did. My mother-in-law prepared everything down to the wire of her passing. She even hung a beautiful blue peplum suit in the closet. Like she was so ready. Her children, when it was time for her to go home to be with the Lord, they were able to just sign on the dotted line. So leading by example, she did that. And so all of her children are very aware of the implications of being prepared as much as they are aware of the implications of not being prepared. And my family, I've literally been like rallying everybody. Listen, we're going to have this conversation. But lead by example. So you do your policy and you talk to your family about why you did your policy. You know, you explain to them the ins and outs as you understand it. In our schools, we need educators to add it to the agenda. This kind of financial planning. You know, deal with the myths. You know, create safe spaces for people to talk about it. Show up trustworthy so that you can to kind of like change the narrative. Be professional. Walk in integrity, because people need someone to trust to get it right. um, but it's going to take time, because one day at a time, one family at a time, one person at a time, one room full of young people at a time. But you have to address all of these fears and concerns, myths and misnomers, and it takes time for us. And I am committed to serving our community. I know it's like it comes with its own, but I understand. You know what I mean? This is who I am. These are my mothers, my fathers, my brothers and sisters, my nephews and nieces, and we need this.
Absolutely, that's so true. And we really have to make sure that we, as much as possible, as gently or as assertively as possible, try to have this conversation with our family, because we want to make sure that they're prepared, especially in our communities. So, what practical steps do you think? I heard you mention our education um, area and in schools. I know I met with someone a couple of weeks ago, and she just started to implement a financial literacy program, and
Hmm.
she works out here where I live in Southeast Queens to help Black and Brown communities understand the importance of financial literacy. How I could see this being part of that curriculum.
Right.
It is about financial literacy. How do you suggest that we incorporate that with our young people in schools?
So I have spoken in schools. I have spoken with the Department of Corrections and the corrections officers. I have spoken in the communities with tabletops. You know what I mean? Just to shake the hands of individuals. I've spoken at different what do you call it? Like seminars and big you know um, workshops that they have at like the Jacob Javits Center, or City Field, or any of those big conventions, where you're literally on the ground, shaking hands, talking to people, um, and just addressing the concerns, doing workshops. There are a ton of free information. There's a ton of free information out there. I have a mailing list of um, these kind of events and Zoom calls, and just to keep educating at every level. Every month there's something where, if you're thinking about how to prepare for retirement, there's
Mhm.
information about some of the you know different challenges that people incur when they're talking about retirement. There are some very specific things that you need to be mindful, estate planning and taxes, and the whole will and trust, and how does that fit together with life insurance. How to properly leave a legacy for your family. There are so many um, pieces of information that we don't know. There's a right way and a wrong way to do that, right? So if we do it the wrong way, we're causing like tax problems for our children.
Mhm.
But if we do it the right way, we can offset those tax problems. If we do it the wrong way, um, we are hindering them from being able to use the monies the way they want to use the monies. Or, you've heard of in retirement where people have to take required minimum distributions. All of these topics come together and paint the financial picture. So you're right. I've had workshops and seminars where the will and trust attorneys are there. Workshops and seminars where the tax advisors are there, because we all need to work together in our community. We all need to show up in our specific areas of influence, in our specific areas of expertise, and we need to put the puzzle back together for our community so that you understand the legal implications of your life insurance policy. And I understand the tax implications of my life insurance policy. And we all understand the implications of having um, a will and a trust. And, what's the difference? And do I need both? And how does life insurance fit there? And how do I just buy a life insurance policy? What else? All of these things are so important that my vision is to connect with the right people like yourself and your workshops. Mental health is a huge part of everything that we're talking about, because if I don't perceive this in a healthy way, I'm definitely not going to take an action. If I'm not in a good place, I'm not going to do anything. And sometimes doing nothing is the easiest thing to do, right? But if you do nothing, then nothing's happening. So I need to deal with, um, I need to work with your expertise so that we can get to the bottom of what is the fear factor. What do you know and what don't you know? Let's deal with that. You know what I mean? We can't sweep it under the carpet because it is one of our roadblocks preventing us from having the financial security that we all need and deserve to have.
Yeah, and I'm glad you mentioned that because I want to ask you, we could touch on this before you tell us how people can get in touch with you and how to find you. This is a tough conversation for some people, right? Mental health may play a part, fear may play a part. So, how can someone prepare themselves to have this conversation with you, with a state attorney, anyone?
Right. I think that like you, um, I've just become and continue to show up authentically and be a trusted partner. I think that people don't buy life insurance per se, right? Or they don't buy the company per se. They learn to talk with and trust an individual. You know, I would go as far as to say this is my life's calling. This is what I'm supposed to be doing. And one way that I know it is because it's not easy. It's
Well, it's never easy.
right. It's not easy. I'm literally fighting for us, right? I'm literally fighting to show up every day and tell you, please call me. Don't hesitate to let me know if you have any questions or concerns. Let's address your questions. Let's address your concerns. So I think that how do we do it? We show up trustworthy, and we have conversations with individuals who have questions and concerns and fears. And once we make a connection where someone will say, you know, Dr. D, I trust you. You've created a safe space for me to talk with you. These are my concerns. Or, Wanda, I trust you. These are my concerns. This is what I thought all my life. I remember as a little girl knowing that my grandmother had life insurance, but knowing that she probably didn't have a policy worth more than $10,000. And I felt like in my mind and in my heart, even as a little girl, that somebody must be taking advantage of her because she is faithfully paying this bill every single month, and the policy just seems so insignificant, you know. But that's the kind of stuff that we've dealt with, you know. I mean, it's very real. Or, you know, when they talk about the redlining in different communities, right? When they talk about that, it is, you know, you feel violated, you know, you feel, you know, taken advantage. So who am I talking to about my finances? Like, what are you asking me? That's not your business. Like, you know how, you know, when we grew up, I grew up in a time where, you know, children were seen and not heard. And, you know, there are just things that you just don't talk about. You don't tell people your most personal business. But it's not like that when you know that I'm literally showing up to do what's in your best interest. I'm literally showing up to give you everything that I have, leave it all on the table for you and let you decide, you know? And that's what we have to do. We have to show up and become trusted partners with our community.
And you can tell that this is your calling. You're very passionate about this conversation, about this work. So thank you for showing up every day for the people that you serve, for our community, and just making sure that families have the protection that they need. It's great work. So thank you.
Thank you. No, thank you so much. And, you know, as I was saying earlier, I have a real passion for children. And I recently, in the last 2 years, have my first granddaughter. And boy, when she was born, I was so excited because I wanted to position her, to be a player in the game, so to speak, right? I wanted to position her differently. So I did do, what we call a custom whole life policy for her. The difference between a regular whole life policy and a custom whole life policy is that you get to choose how long you will pay for this policy, right? So I want you to compare it to having, a 15-year mortgage as opposed to a 30-year mortgage. Some people decide right up front that they do not want to spend 30 years paying for a mortgage. So they work with the bank, and the bank says, okay, well, let's do a 15-year mortgage. Now, that does put you in a more condensed situation where it costs a little bit more because now you don't have the time factor on your side as well. However, you will be finished paying for the policy by the time this child is 12 or 15 or whatever that is, before they go away to college. And it's a whole life policy. So it will do what it's supposed to do. But for me, the blessing is knowing that even if I'm not here, when she graduates from high school at 18, the policy is all paid up. It will continue to do what it does. It will grow. It will continue to just grow a cash value for her. And maybe by the time she's my age, you know what I mean? She'll have an amazing growth in the policy. It is, when you look at it, it's built on compound interest, which some people say it's like the eighth wonder of the world, compound interest,
Mhm.
because it grows, and then the interest and dividends are paid on top of it, and then it grows some more, and then the interest and dividends from last year are paid on top of that. And you know what I mean? And it just kind of balloons like a snowball rolling down the hill. It just grows like that. And it brings me so much joy, to be able to do something so simple, but you know, it's working today to impact tomorrow, working today to impact 20 years from now, 10 years from now, 30 years from now. But she will always be able to say, like you can say, my grandmother did this for me when I was 2 weeks old. She was 2 weeks old and I did that. You know, and the good thing is that children they don't even do blood work or labs. They just are born into the world, blessed with a grandparent. And this is the generational wealth that we're talking about. So if you and I were both her aunties, and I did a policy for her and you did a policy for her, You can imagine, right? If you and I were her aunties and we had two brothers and both of her uncles did the same thing for her, maybe she's an only child or an only niece. You can imagine now if all of our policies are growing for her, and while she's sleeping, she's 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 earning wealth while she's sleeping. You
Mhm.
know, that's different than anything else in a portfolio because it's not invested in the market. So you don't have the fluctuations, the ups and downs. And I'm not opposed to, having a risk tolerance when you're young. You know what I mean? You definitely want some things that are invested in the market, because you'll get the most growth there. But I'm just talking about like the difference between the tortoise and the hare.
Right.
Slow and steady, slow and steady, slow and steady. Right. The hare is the tortoise is going to get there. Um, but at times when you have products that are invested in the market and the market is down, like some of the craziness that's going on, if you were at retirement age and you needed to take money out of your 401k, but the market is severely down, the week that you need to do that, then how much more should you have another vehicle that is slow and steady, slow and steady, slow and steady? Take the money from there, leave the money in the market so that it can recover. Because if you take it out now, you lost and you lost. If you lost, then you don't give yourself a chance to recoup that loss if you take it out while the market is down, right? But if you had an alternative part of your portfolio called whole life, it just gives you, other options of, you know, having the liquidity that you're looking for.
Absolutely. Absolutely. Well, you have shared some amazing knowledge. You've dropped a lot of gems. So thank you for really educating the community on all that you do. Where can people find you? How can people get in touch with you?
There is so much more. I have a QR code. Let me see, or maybe I'll just give you my cell phone number, my mobile number that I use 100% of the time, always available. And if not, I'll call you back as soon as I am. It's 516-428-2779. And I can be emailed at wjackson02 at F as in Frank, T as in Thomas, Tamika,
Mhm.
um, at ft.newyorklife.com.
Awesome.
So again, that's wjackson02 at ft.newyorklife.com.
Wonderful.
Okay.
Everyone, you got her cell phone number so you can reach her, her
Yeah.
email address. Please reach out to Wanda Jackson if you need life insurance, want to have a conversation. She said she'll return your phone call right away. So, this is
It's not just life insurance. It's actually financial planning in the sense that if you're trying to prepare for retirement, we can talk. If you're trying to prepare again like estate planning, we can talk. If you want to prepare for college funding, we can talk. There's also a concept that is becoming more and more popular on the internet, like TikTok and Instagram. You might see, or even YouTube, you may see, and it's
Mhm.
called infinite banking.
Yeah, I've heard
It's
of
called, or like bank on whole life. They call it different things, but it's basically the same concept, right? That concept is built on the engine of whole life insurance, you know, and it's important that we understand how it works because it is a vehicle that will allow you to literally become your own bank. And the implications of that are huge because you don't have to jump through hoops to get your own money. So you don't have to have a great credit score
Mhm.
to use your own bank. You don't have to have a background check, a criminal background check, or anything to use your own money. And you don't have to tell me or anybody what you want to use your own money for. And I think that's huge because a lot of times, some of the hangups that we have about being out there and trying to get money from different institutions. If the playing field is not level, and you have challenges getting money from different institutions differently than others might have, getting money from institutions, then you are positioning yourself to get the money from yourself,
Right.
or you're positioning yourself to be able to loan a friend or family member what they need. You become like this liquid person, and yes, you're going to pay yourself back, but the rules are so much gentler for you to pay yourself back. You don't pay the same interest rate. And I mean, some of these interest rates, 19% interest is modest. Some of these interest rates that people pay for, like car loans and personal loans and mortgages, even now, the interest rate to pay yourself back is lower right now than it is to have a mortgage loan out.
Yeah.
So you are positioning yourself to do some really, really great work to prepare to invest in real estate. I have a colleague. I want to share this, and then I'm going to let end it. But I have a colleague, as a former real estate broker, and she's an agent. And she said to me, she's an African American young lady, and I was so tickled. She said, Wanda, she said, I've had so many clients that show up with more than $100,000 for their down payment and their closing costs. And she said, but after I saw this 3 or 4 times, she said, I had to say, wait a minute. Where are you getting all of this money from? You know what I mean? How are you prepared with over $100,000 so easily? Where are you getting this money from? And she said, I heard them say over and over, I borrowed it from my life insurance. I borrowed it from my life insurance. I borrowed it from my life insurance. And she said, I didn't even know that was a thing. And I spent time with her to prepare her and her family to do just that, because it's that kind of liquidity that we're talking about. We just don't know. We just don't know.
We just don't know. That's amazing. Thank you for sharing that. This has been such a great conversation. I know there's so much more to say.
It is.
So hopefully we'll get to have another conversation and talk soon. But I really hope people reach out to you. Thank you for sharing your number. Give them your number again.
Yes, it's 516-428-2779. And that's Wanda Jackson. I am a financial professional with New York Life Insurance Company. I have such a passion for helping us get it right. I have too many friends and family members that have previously used GoFundMe as an option. And we don't need to do that. Life insurance is not as expensive or a huge undertaking like most people would think without really knowing. And it can be as little as $8 a month or $10 a month. Some very, very low numbers, $4 a week, $5 a week, and we can position you to have a book of, financial development that can develop with you as you mature financially. We can work together to mature your baseline as you mature financially in your career.
Thank you again, everyone. This has been the Dee-Brief with Dr. D. Real talk, real strategy, real leadership, one insight at a time. Thank you, Wanda.
Thank you so much for having me. Thank you.
Bye-bye, everyone.
Bye-bye.
Well, that's a wrap of another power-packed episode of the Dee-Brief with Dr. D. If today's insight inspired you, share it, leave a review, and connect with me. Remember, leadership is a journey. Healing is possible, and transformation is yours for the taking. Don't miss next week's episode, because every time we meet, we're unlocking new strategies, fresh perspectives, and bold breakthroughs. Be sure to subscribe to our YouTube channel and follow us on social media at the Dee-Brief with Dr. D, so you never miss an episode. Until next time, keep leading, keep growing, and always reclaim your joy. See you later. Well, that's a wrap.